Good morning. Last class inge stop on question number 5 Ilya. Question number 5. Have you tried this question number 6? Okay. For preference shareholders, 3,800 shares into 5 into 18 plus 4. 2,800 shares into 5 into 18 plus 4. That is given in the question. 5 preference shares of 20 each. 18 paid up at rupees at a premium of what? 4 per share is given. 6 equity shares at a premium of that is 18 rupees paid up, 4 rupees premium. 18 rupees paid up, 4 rupees premium. So 8,200 shares are there into 6 into 18 plus 4. The 3,200 shares into 6 into 18 plus 4. Live online friends, am I audible?
Yes, sir.
So we are given purchase consideration like 500 preference shares, 5 preference shares of 20 each, but 18 paid up at a premium of what? 4 rupees per share is given for each preference share in the company. So 3,800 shares are there into 5 into 22. 2,800 shares are there into 5 into 22. That is what is allotted. For equity shareholders, 8,200 shares are there into 6 shares are given in each company. So 3,200 into 6 into 22 like that. So we work out assets minus liabilities, goodwill, land and building, plant and machinery, trade receivable, inventory, cash in bank, cash in hand, debentures, trade payable, secure loans. You get net assets. Net assets already this much has been paid. Already this much has been paid. Balance is payable in what? Cash. Balance is payable in cash. Any doubt in this working? Recorded class students, if required, pass and copy. Others, any doubt in this question? Why balance in cash? They want to adjust the rights by paying which one? Cash. That is why assets minus liabilities will give us consideration 16 lakh 2,100, 7 lakh 92,250. So this much shares are given to preference shareholders and equity shareholders. Balance is payable in which one? Cash. So when you prepare balance sheet, this goodwill will come as which one? Intangible asset. Land and building, plant and machinery, furniture will come as tangible assets. Current asset like trade receivables and inventory will come. Cash போடும்போது add cash at bank, cash in hand both minus this purchase consideration paid. How much is paid in cash? 1,01,700 and what? 61,850. So cash in hand, cash at bank add பண்ணிட்டு minus this purchase consideration paid should come. Then debentures, trade payable, debentures will come in long-term borrowings. Secure loan will come in long-term borrowings. Trade payable will come as what? Current liability. The shares given, face value will come in which one? Face value will come in share capital. Premium will go to securities premium account. You can try the balance sheet for this question also. Any doubt in this? I request you to update this working also. Any doubt in this? Any doubt in this? Do you understand why are we paying cash? It's clearly mentioned in the question. We'll pay cash to equity shareholders of both the company in order to adjust their rights as per intrinsic value. Intrinsic value is nothing but net assets value. Intrinsic value is nothing but net assets value. And in the books of selling company, as usual, we prepare which account? Realization account, where we transfer all assets at book value. Debentures, trade payable, we transfer. Purchase consideration. PQ limited account it out to realization account, that's 16 lakh 2,100. We get this in the form of shares and cash. We get this in the form of shares and which one? Cash. This shares and cash we get it. Then first we settle preference shareholders. Preference share capital is 3 lakh 80. But look at how much we got for them. 4 lakh 18,000. So balance will go to realization account. Preference share capital is 3 lakh 80. But look at the consideration we got, 4 lakh 18,000. Balance will go to realization account. Then close the realization account. Equity shareholders like capital, P&L account, general reserve போட்டுட்டு realization loss போடுங்க. Equity shares in PQ Limited we got for them. How much we got for them? This 10,82,400 is given to equity shareholders. Cash that we got is given to equity shareholders. Cash that we got is given to which one? Equity shareholders. This is in the books of which company? Selling company. Same order. Transfer assets, all assets taken over. Transfer liabilities, debentures and trade payable. Consideration due, PQ Limited accounted out to realization. That comes as by PQ Limited. Then shares, we are given both preference shares and equity shares are given. Consideration paranga. Cash also we received. Okay. This preference shares receipt is given to preference shareholders. Look at the preference share capital how much? 3,80,000. But we give 4,18,000. Balancing figure is transferred to which account? Realization account. Then realization loss is transferred to equity shareholders. Then transfer capital, transfer P&L, transfer general reserve. Look at the consideration statement. We got this 10,82,400 for equity shareholders as well as what? This cash we got for them. Both are given to our equity shareholders. Both are given to our equity shareholders. It's a simple problem only. Now, I request you to go through question number 7. P Limited and Q Limited agree to amalgamate their business. The scheme is combined capital of PQ Limited கொடுத்திருக்காங்க. Assets and liabilities are going to be exchanged for PQ Limited. Balance sheet is given to us. So 6 lakhs plus 8,40,000. 6 lakhs plus 8,40,000 is the combined capital. Read the question. The consideration was on the based on which one? Net assets of the company shown in the above balance sheet, but subject to additional payment, P Limited for its goodwill calculated based on what? Weighted average profit of the last 3 years கொடுத்திருக்காங்க. Weights will be assigned in 1 to 3 order கொடுத்திருக்காங்க. Profits are given. Then shares of PQ Limited will be issued in proportion to which one? Net assets value of both the companies கொடுத்திருக்காங்க. In order to increase the working capital, okay, authorized capital is raised. They made a public issue like that they have given. Read the question once again, then we'll start solving. Purchase consideration is given in the problem. Equal to combined capital of which limited? P Limited and which limited is given? Q Limited. Purchase consideration is 6 lakhs plus 8,40,000. 6 lakhs plus 8,40,000. The consideration was based on net assets of the company, subject to additional payment for goodwill is given to us. The shares of PQ Limited will be issued to P Limited and Q Limited in proportion to what? Net assets of the companies. Simple. Work out assets minus liabilities, net assets. You will get proportion here. In that proportion, shares will be allotted. In that proportion, shares will be allotted. Read the full problem once again. It's a fantastic and very good problem. We have to value the goodwill. We have to value which one? Goodwill. Please read the adjustments once again.
14,40,000 would be divided in the ratio of net assets.
Net assets. Okay. But goodwill we have to value include and share. Go through this, please. Go through the adjustments once again, then we'll start solving. Before we start solving, we have to value valuation of goodwill of which company? Which company? P Limited. They ask you to follow weighted average method. What is weighted average method? Simple. Here, profit. You take the profit, assign the weights. Then you will get the product. Same like weighted average mean all the something like that. Year என்ன கொடுத்திருக்கோம் 14 15 15 16 16 17 3 years are given. What is the profit given? Shall we start journal entries in the books of PQ Limited? Shall we? What is the first entry you will pass? Business purchase account data to which one? Liquidator of which company? P Limited. How much is the first company's consideration? 21,60,000. Don't do this in the exam. For completion, maybe time saving, I use the word sundry assets. Sundry assets account data. P Limited or sundry assets. What is the total of sundry assets? 18,60,000. Then goodwill be valued. Goodwill account data. How much? 5,40,000. To what is the liability? Trade payables. 2,40,000 to bank OD. The bank OD is not there. To business purchase. The entry will tally. Entry will tally. How much? 21,60,000. Then we pay the money. Liquidator of which company? P Limited account debit. To what do we give? Equity share capital to securities premium. Equity share capital to securities premium. We have to pay 21,60,000. To equity share capital is how much? Then 5,40,000. This is for taking over which company? P Limited. 3 more entries we have to pass for taking over Q Limited. Business purchase account data to liquidator of Q Limited, how much? 14,40,000. Sundry assets account data, how much? 14,40,000. No goodwill. Now sundry assets, how much? First, second company.
25,20,000.
To bank OD இருக்கு.
5,40,000.
5,40,000.
Trade payables. 5,40,000.
This is liquidator of Q Limited. So 14,40,000. Equity share capital is 5,60,000. Securities premium we worked out 8,64,000. Is it over? No. There is one more entry we have to pass. What is the one more entry you have to pass? We issued 72,000 equity shares of 10 each at the same rate of premium. At the same rate of premium. What is the rate of premium? What is the total share capital allotted? 14,40,000. 14,40,000 divided by 10 you will get number of shares. 1,44,000 shares we have allotted. Okay, which means what is the total premium? So what will be the premium per share? How to work out? 21,60,000 divided by 1,44,000 shares. Now we issued at what? 15 per share. At the same premium, we are going to issue the shares in the market. At the same premium, we are going to issue the shares in the market. What is the entry you will pass for that? Bank account data to equity share capital. How many shares are issued? 72,000 into 10 face value to securities premium.
10 lakh
This will be 72,000 into 15.
10 lakh 80,000.
Total money we collect. Do you understand? Total face value of shares allotted is 14 lakh 40. Okay, so we are allotting what? 1,44,000 shares. So what is the premium per share? 21 lakh 60 divided by 1,44,000 rupees 15 per share. At the same premium, we are issuing the fresh shares. We are asked to prepare what? Balance sheet also. போறீங்களா அது? Shall we? Shall we prepare the balance sheet? You complete பண்ணிட்டீங்களா? Live online friends, is it over? Any doubt in the journal entry or in the working? We valued goodwill, which is 5,40,000. So including goodwill, we got the net assets. In the proportion of net assets, purchase consideration is shared 8,64,000 and 5,76,000. So net assets, this is the face value of shares. Balance will be securities premium. So for 1,44,000 shares, if it is 21,60,000 means 15 per share. Based on the same premium, we issue the shares in the market. So we passed 3 sets of entries for each company's acquisition. Then we made which one? Public issue also. Shall I proceed to balance sheet?
Yes.
Start the balance sheet. Let us do the working. Share capital. Purchase consideration. What is the share capital given? 14,40,000 total. This one. Then we have made a public issue also. Public issue, what is the share capital? The 7,20,000. Only the capital part will come. So 14,40,000 plus 7,20,000. 21,60,000. Then reserves and surplus. Securities premium. In purchase consideration, what is the securities premium? This value. 12,96,000 plus 8,64,000. 21,60,000. In public issue also. In public issue also, there is a securities premium, 10,80,000. Total will come in the balance sheet. Non-current liability, any in this question? Yes. I hope no non-current liability. No non-current liability in both the questions, both the company. Then current liability trade payable of P Limited plus Q Limited. P Limited plus Q Limited. We are taking over at balance sheet value only.
7 lakh 80.
This 2 lakh 40 plus 5 lakh 40. How much?
7 lakh 80.
7 lakh 80,000. Then tangible assets. This fixed assets. 7 lakh 20 plus
18
10
lakh.
lakh 80.
18 lakh.
Intangible assets. Nothing but goodwill.
5 lakh.
5 lakh 40,000. No investments, right? No investments. Inventory of both.
10 lakh.
We took over at book value only. 3 lakh 60 plus 6 lakh 60. How much
10
will
lakh.
come? 10 lakh 20,000 will come. Then inventory of P plus Q. Then trade receivable also taken at book value.
1 lakh 60.
1 lakh.
60.
Cash balance, let us do the working because we collected money, paid money and all. Which company has a positive balance? P Limited has a positive balance. How much is there?
3 lakh.
3 lakhs. We collected by public issue. How much we collected by public issue?
18 lakh.
This 18 lakhs we collected by public issue. Less bank OD. Bank OD of which company?
Q Limited.
Q Limited. After amalgamation, both are same.
5 lakh.
How much? 5 lakh?
40.
So net balance. Closing balance, how much? 15 lakh 60,000. So 61 lakh 80,000 is the total of the balance sheet. So what is different in this question? You have to work out the net assets and exchange the shares based on net assets. Balance will be taken as what? Premium. Balance will be taken as premium. And we make a public issue at the same premium rate. This public issue at the same premium rate. Because purchase consideration is equal to share capital. This journal entry path podla. Then based on the purchase consideration statement only. Purchase consideration. What is the purchase consideration? 8 lakh 64 plus 5 lakh 76. 14 lakh 40. That's purchase consideration. Since assets and liabilities are taken at book value, we just add the balance sheet values. Shall we? Shall we? Read the next question, please. போறீங்களா அது காப்பி பண்ணிட்டீங்களா? Next question பாருங்க. Financial position of X and Y Limited is given as on what date? 31st March 2018 is given. Equity shares are given, preference shares are given, 9% preference shares are given, general reserve is given, retirement gratuity fund, trade payable is given, goodwill and various others are given. Preference shareholders are paid what? 10% premium. Goodwill should be completed. 2 years of average profit of last 3 years is given. Okay. Profit of 2014-15 included some insurance claim is given. Loss by fire, etc. is given. There was an embezzlement of cash is given. So we have to value the goodwill based on the data available. Land and building is valued, plant and machinery is valued, inventory is taken over 10% less than the book value. There was an unrecorded current asset in the book whose fair value amounted to how much? 15,000. Trade payable, mutually due is given. Equity shareholders of Y Limited will be issued shares at what? 5% premium. Show journal entries in the books of X Limited and prepare what? Balance sheet. Prepare realization account in the books of Y Limited. I request you to read the question and I request you to try to value the goodwill. Before we start solving, what we need to value? Try to value the goodwill.
profit வந்து 7,72,000.
72,000.
Loss by players 1 lakh.
First year, what is the profit?
90.
90,000. Second year, what is the profit? 78. Third year, 72,000. It is 72,000.
Loss by
Wait,
fire.
profits, insurance claims 25,000. Loss by fire is
30,000.
30,000. 7 remove it. Loss by fire is 30,000. Loss by fire is 30,000. I hope everything else is correct.
Yes.
So first try to find out the value of goodwill, then we'll proceed. ಇಲ್ಲ profits given for 2016 17 is given, then 15 16 is given, 14 15 is given. What is the profit given? 90,000, 88,000, then 47,000.
So 1,43,333.
Illa. Let's see. See, listen. Profits of 2014-15 included credit for insurance claims 25,000 கொடுத்திருக்கான். See whether this insurance claim will come every year. Whether insurance claim will come every year. It's a non-recurring profit. Less insurance claim. Why less insurance claim? பரவாயில்ல. First in the insurance claim part. See, how to value goodwill? Goodwill should be valued ignoring which one? Non-recurring items. What do you mean by non-recurring item? That income or expense will not come again and again. This insurance claim, will it come every year? No. Eliminate it. How much? 25,000 you have to eliminate. Then, and what is the loss recorded by fire? 13, 14?
40,000.
That doesn't matter. That is 13, 14. That is not within this financial years. That is not within this financial years. Then what is given? In 15, 16, there was an embezzlement of cash, means theft of cash. Whether this loss will come every year? No. So add back loss by theft. Why? Because this loss will not come every year. How much? 10,000 loss. Sorry, profits given 90,000, 70, 8,000 and
72,000.
I repeat, why are we eliminating insurance claim? This insurance claim is a kind of an income credited to P&L account. We lost by fire, there's an insurance claim. This insurance claim, will it come every year? No, eliminated. Why are you adding back loss by theft? This loss will not come every year you add it back. What about this loss by fire? What about this loss by fire? Why it is not relevant? 2013-14. We are not within the 13-14. So it will give us profit or normal profit. Normal profit earned. Then what is the average profit?
75,000 are equipment.
Total of all the three, of course, divided by 3. How much? 75,000. Goodwill is valued at
2 years purchase.
2 years purchase. 75,000 into 2, 1,50,000. Then you can add all the other assets. Land and building, plant and machinery, current assets, inventory, trade receivables. Some unrecorded assets are also taken over. Unrecorded assets are to be considered now. Look at this. Unrecorded current assets in the book, 15,000 will be taken over by X Limited as given to us. Then bank balance we can take less in another. Gratuity, trade payables
That's all.
will give us net assets. Work out and tell me the net assets.
Mutual dues.
That mutual due we will eliminate it after amalgamation is over. Mutual due will be eliminated after the amalgamation is over. Land and building, are we taking book value? 5 lakhs. Plant and machinery, revised value is given 4 lakhs. Then inventory, inventory 10% less than the book value.
4,72,500.
Trade receivables, debtors minus how much percentage?
2.5.
How much?
2,92,500. Unrecorded asset 15,000.
Then
60.
gratuity liability,
That's 60. Trade
Trade
payables
payable?
2,40,000.
this will give us net assets. Wait. In the net assets, யாருக்கு first pay பண்ணணும்? Net assets are how much? 15,90,000. First you have to pay the money to whom? Preference shareholders. How much is paid to preference shareholders? Look at 10% preference shares are paid at 10% premium. Look at the preference share capital given. Look at the preference share capital given. 3 lakhs, we are going to pay at 10% premium. So 3 lakhs plus a 10% premium. You have to pay how much? 3,30,000 to them. Out of 15,90,000, 3,30,000 belongs to equity shareholders. Balance goes to whom? Sorry, preference shareholders. Balance goes to equity shareholders. And please remember, shares are allotted at 5% premium. Shares are allotted at 5% premium. Now, number of shares will be how much? 1,60,000 divided by 10.5. 10 rupees plus 0.5 premium. So how many shares will be given?
1,20,000.
1,20,000 shares will be given. Take up this, then we'll pass journal entry. We'll pass which one? Journal entry. Assets minus liabilities, net assets were there. First we pay to preference shareholders, then balance is given to whom? Equity shareholders. Shares are allotted at 5% premium. So 10.5 if you divide, you get 1,20,000 shares. Then you try to pass a journal entry. Journal entry நீங்க தான் ட்ரை பண்ண போறீங்க. Journal entry try பண்ணலாமா? What is the first entry you will pass? Business purchase account. Data to which account?
$15,92,000.
We are doing in the books of which company? We are doing in the books of which company? X Limited, 15,90,000. Then debit all the assets at book value or revised value that is taken over. goodwill account, data, land and building, plant and machinery, bank balance, everything you debit at book value, and of course, sorry, book value, revised value. Everything is taken over at revised value only. 2. Gratuity liability
60,000.
to trade payable to business purchase. This entry will tally because we did everything at what value? Net assets. Then settle the purchase consideration. Liquidator of which company? Y limited account, data to which one? Preference share capital to equity share capital to securities premium. You have to pay 15,90,000. 15,90,000 we have to pay. How much we are paying?
Share capital 3 lakh.
3,30,000.
Premium.
Premium issue பண்ணல. They discharged at premium. Look at the word. They are paid at premium. We are issuing preference shares at par value only. Equity share capital will be how many shares? 1,20,000 shares into 10 rupees. 12 lakhs will come. Securities premium, that 1,20,000 into 0.5. How much?
60,000. 12 lakh and 60,000.
That's it. Next, you try to prepare the balance sheet. While preparing the balance sheet, please ensure that what you are going to ensure. While preparing the balance sheet, take the book value of which company? P Limited. Book value of P Limited plus journal entry that we passed here. For example, share capital போடும்போது, what is the share capital of P Limited? 30 lakhs plus 3 lakh plus preference shares and equity shares given, like that you have to work. Then, while doing reserves and surplus, take the general reserve of which company? P Limited only. Don't take Q Limited. Don't take which one? Q Limited. Don't consider balance sheet of Q Limited. Don't consider balance sheet of which company? Q Limited. Balance sheet prepare பண்ணும்போது existing balance sheet of P Limited plus what? Journal entry that we passed. The 3 journal entry, based on that you have to prepare which one? Balance sheet. Try பண்ணுங்க. Balance sheet check பண்ணலாம். Share capital, tell me.
48 lakh 30,000.
Preference share capital of P, how much is there? Preference share capital of P, X, okay. 3 lakhs plus purchase consideration.
3 lakh.
Total of 6 lakhs 30,000. Then equity share capital of X, 30 lakhs plus purchase consideration, how much we paid? 30 lakhs plus purchase consideration, how much we paid? This 12 lakhs. Only the face value will be added here. Total how much? 42 lakhs.
Preference shares, 10% preference shares are to be paid at 10% premium.
They are going to be paid at 10% premium.
But
You are a, wait, pardon, you are a preference shareholder. What was your old capital? 3 lakh.
3 lakh.
We are going to pay you 10% premium for you, which means you will get 3 lakh 30,000. You will get 3 lakh 30,000. But our shares are not given at premium. நம்ம ஷேர் நம்ம பிரீமியத்தில் அலாட் பண்றேன். உங்களுக்கு பிரீமியத்தில் நான் பே பண்றேன். என்னோட ஷேர் வந்து ஃபேஸ் வேல்யூல அலாட் பண்றேன். You are getting a premium of 10%, 3,30,000. But 9% preference share capital is allotted at face value. அதனால தான் இங்க face value ஆடாது. You understand? It is not shares are allotted at premium. Not shares are allotted at premium. You will get extra 10%. Then reserves and surplus. What will come in reserves and surplus? General reserve of X. General reserve of X, how much is given?
2,10,000.
2,10,000. 2,10,000 general reserve of X. Securities premium. The purchase consideration general entry la paru
60,000.
60,000. So total 2,70,000.
Gratuity.
Then gratuity fund will come under long-term provisions. That is not a liability. There is a long-term provision. What is a gratuity fund? 1,50,000 plus general entry less 60, 2,10,000. Trade payable, I hope book value only we have taken. 3,90,000 plus journal entry.
2,40,000
3,90,000 plus journal entry 2,40,000 we have taken.
minus
Take it.
20.
Minus mutual due 20,000. 3,90,000 plus 2,40,000 minus mutual due 20,000. 6,10,000. See, debtors includes the amount payable to creditors. Mutual due will be eliminated from both liability and asset. Plant, property and equipment. What and all will be taken? Land and building, plant and machinery.
24 lakhs.
Land and building for this 9 lakhs plus revised value 5 lakhs. 9 lakhs plus 5 lakhs, 14 lakhs. Plant and machinery for 15 lakhs plus revised value.
4 lakhs. Inventories.
33 lakhs tangible asset. Intangible asset, goodwill of first company, how much?
1,50,000.
1,50,000. Second company, இருக்குங்களா? Yes, we are valued. We valued illa. This 75,000 into 2, 1,50,000. Second company we revalued 1,50,000. Total how much will come? 3 lakhs will come. Inventory பாருங்க 7,50,000 plus revised value journal entry. Inventory 4,72,500. How much will come? Trade receivables. What is for the first company? 6 lakhs plus second company order trade receivables இங்க இருக்கு 2,92,500. 2,92,500 minus 20,000. Eight lakh 72,500. Then cash and cash equivalents. What is cash and cash equivalents? 1,50,000 plus 60,000. How much?
2 lakhs.
Very simple. One more asset. That unrecorded asset taken over. Okay. Other current asset. Unrecorded asset taken over by the company. Journal entry le போட்டிருப்போம் 15,000 that will come.
₹59,20,000.
இங்க மிஸ்டேக் பண்ணி Done? Shall we? Over live online inference have you completed?
Yes, sir.